Hello and welcome to NJBIZ Conversations. I'm your host, Jeff Kanaj. My guest today is Pete Dontas. He is Managing Director and New Jersey Market Executive at Wells Fargo. Pete, welcome back.
Thank you, Jeff. Good to see you again.
Good to see you too. I wanted to talk about the business and the economy. The first half of the year was, let's say, interesting for New Jersey businesses. I'm wondering what you're hearing now. What is your sense of what the mood is among people, among business owners, executives? There was some concern about a possible recession. There was some uncertainty around tariffs and costs and inflation and things like that. How is it as we head into the fall? What are you hearing now? What are you hearing from clients and customers about what's going on out there?
Yeah, I think it's all those things, Jeff, that you
Okay.
just mentioned, and that's a lot to swallow. But just to refresh your memory, I'm, at Wells Fargo, like you said, the market executive, been in that role for about 10 years now, almost to the day, handling all of New Jersey. We have four teams that handle the market, throughout the state, up as far north as Paramus, down to Short Hills, Island, where I sit, and then eventually down to Marlton.
Okay.
So the business has been good. There's growth in the market, and as relates to what we're hearing from clients, it's a little bit of everything. Obviously, the tariffs and interest rates are top of mind for everybody. I think earlier in the year, clients were more concerned about where tariffs were going to end up and whether we were going to have a recession. So far, it looks like we've dodged that bullet.
Right.
We'll see what happens with interest rates over the balance of the year. Jay Powell was in Jackson Hole last week, made a statement. Certainly, the market reacted positively to that. But I would say overall, companies are doing fairly well and really managing to kind of the new normal, right? There's that uncertainty with what happens with tariffs and what the impact is on them. And I'd say almost everybody is impacted by that. Then, of course, you have what's going to happen with interest rates and how you make decisions as a company as to, CapEx, working capital requirements, and even M&A.
Okay. Well, I did want to ask you about interest rates, but let's stay with the general economy for a bit because you mentioned a couple of things that I'm curious about what you were seeing. You mentioned M&A. I'm also curious about all sorts of, what sort of calculus is going into making decisions on investment, on spending, on hiring, on M&A, on other kinds of big business decisions. What is the main factor that's driving what corporate executives and business owners are doing or not doing right now? Are people still pulling back, still waiting a little bit, or are some of those things loosening up a little bit? Some of the spending, some of the kinds of decisions that maybe had been put off earlier in the year.
Yeah, I would say things are starting to loosen up. What drives, I think, most of these decisions is economic uncertainty or economic certainty, right? If you're concerned about what's going to happen in the next 6 to 12 months, that is going to drive your decision. And I think the tariffs really drove that back in, that April timeframe. We all remember the volatility in the market.
Right.
That seems to have settled down. And then you have the interest rate environment. Look, if they're going to lower rates, it looks like, but even a quarter or 50 basis points is not going to change, the world, right? It may impact what you're going to decide to do, but on the margin, I think. So as it relates to M&A, I think again early on we saw clients say to us, it's really hard for us to value a company that we're looking to buy, or even if we're looking to sell our business, how will someone value our business again with the uncertainty of the tariffs? Again, I think as we moved into now almost September, we at Wells Fargo in my group, we have 3 live M&A deals that we're talking to clients about.
Mm-hmm.
That wasn't the case a year ago. So you're seeing some loosening up, like you mentioned a minute ago, because companies are now, realizing this is what it's going to look like. The impact, won't be as dramatic as we thought. And again, it's not done yet because again, there's still certain countries that have not come to any resolution. Right. But the fact that we have 3 M&A deals, I think that speaks volumes as to our middle market type clients looking to do something. And then, As it relates to economic expansion and capital expenditures, again, if there's economic uncertainty and you're looking to, build a plant in Texas or expand in upstate New York, you may pause if you're not sure where things are going to go. But as the picture becomes a little more clear, we're seeing companies start to expand, whether it's
Okay.
CapEx, whether it's plant expansion, and what have you.
Okay, well, that's certainly an optimistic sign. Just getting back to M&A for a minute, you said three M&A deals. Are they strategic deals, financial buyers? Because there was a lot of talk early on in the year about how private equity firms were sort of getting much more active in a number of different sectors. What are you seeing? Or is it strategics or
Yeah,
financial buyers who are driving
it's
that market?
two of them are strategics,
Okay,
and one of them we don't know yet. We're
okay,
actually representing the seller, early stage. It could be a financial buyer, it could be a strategic buyer, but the other two are strategic buyers.
okay,
One is food related, one is a different industry. But look, the private equity firms are certainly out there. They've
okay.
got a lot of capital. And one
Mm,
other thing I would tell you, Jeff, the financial markets are wide open. The banks, especially Wells Fargo, we're looking to do business. And then you have these private lenders that you probably read about that are also very active. And lastly, the public markets are receptive, whether it's high yield bonds or going public or institutional bonds. It's a good market right now for the clients.
all right, and so it sounds like there, just again looking forward, interest rates. Again, you mentioned Jay Powell suggesting that there would be cuts later in the year. We don't know how much or when exactly. Although there have been sort of different kinds of signs. There was a sign that the labor market might have been cooling a little bit, and inflation remains above the Fed's target and seems to be increasing. Those two things kind of seem to be in tension. I'm curious as to how you see that playing out, number one, and number two, if the Fed does cut rates in this environment, what effect would that have on again business decisions and the economy in general?
Yeah, here's the dilemma, and it's you nailed it. It's the job market, which feels like it's weakening a little bit,
Right,
and then you have, the guard against inflation. So if you start to lower rates and inflation is not under control, right? Lower rates will just fuel to some extent more inflation. So I think
right,
that's the dilemma. If
hmm,
you and it depends on what you think, not what we think, but what the Fed thinks.
right,
If they believe that inflation is under control, you've heard that 2%, number. It's a little higher than that right now, but two and a half, three, right around there. If that's manageable and they lower rates, I think we'll be fine. And then again, the whole tariff discussion, and we're talking a lot about tariffs, but early on, my sense was that you've got the exporter, Asia, India, China, of course. You've got the importers, the companies that we all know, and you have the consumer. So how does
hmm,
that tariff get, divided by those three constituencies? I don't know, and every company is different.
right,
But what I'm hearing is when it's all said and done in the near future, 6 months from now, next year, that a lot of that will fall on the consumer. So that'll impact inflation. We'll see, because public companies aren't going to want to impact their earnings per share. The
right.
exporters, I think, have some room, but that'll be the trick, and that I think will determine what happens with inflation, and therefore what happens with interest rates. As far as the employment picture, boy, it just depends. It's the economy's so big. It seems like you've got the dinner, restaurants are busy, people are on planes, people are working, but
Right, right.
it's a mixed bag.
Okay. So given that, is there anything that corporate executives, business owners should be concerned about heading into the end of the year and into next year? What would be the biggest challenges that you see out there or that you're hearing about?
I would say two things. You want to make sure that your growth is you're continuing to grow and you're managing your expenses. So
Okay.
that's whether it's IT, whether it's people, any kind of, insurance, any kinds of expenses. I think you want to manage that. And then secondly, you want to make sure, if possible, that you maintain your margins, right? You start to creep into your margins, that impacts, right, your profitability, your EBITDA, which we like to look at, and then that impacts your ability to borrow. So I think it's managing your expenses, looking at and maintaining growth, and then of course margins. Those are the three things I would say.
Okay. And so just again, looking ahead, if we could, sometimes pessimism, if folks expect a recession, it becomes a self-fulfilling prophecy. It doesn't sound like, from what I'm hearing you say and what you're hearing, it doesn't sound like most people expect there to be a downturn in the near future. Is that what you're getting?
Yeah, for sure. And I
Okay.
think that's fueled by, look at the stock market, it's at an all-time high.
Right.
Interest rates are probably coming down. The unemployment rate is, we'll call it reasonable. So I think, yeah, I think people are generally optimistic. It's just a matter of, and every industry is different, right? It's just a matter of being able to grow your business and continuing to expand, what you're doing and what your overall game plan is. So I would say generally, Jeff, optimistic. But there's always caution, right? There's always going to be some caution, but I think we're in a good place.
Okay. If we could, just a little bit before I let you go, talk a little bit about Wells Fargo itself. Um, Given everything that we've just talked about, what's your most important job right now? What keeps you awake, or what keeps you going right now?
Look, we continue to build momentum. We're excited about, the opportunity and the near future. I think New Jersey is a great market, right? It sits, and we've talked about this before, in between obviously Philadelphia and New York. The labor market, I'm on the state chamber with Tom Bracken,
Right.
very optimistic in terms of, what's happening in the state with companies coming here. There's always companies leaving. You always read about that. But generally, I think we're in a good place. And look, we have the upcoming election, right? So that's going to be interesting to see how that shakes out and what the impact would be to the New Jersey market. But speaking about Wells Fargo and our ability to support companies, no question, we're supportive. Our loans are up. We've acquired new clients. I was on a call this morning, expanding with an existing client. So we're here to support the clients, and we
Okay.
have the balance sheet and the capabilities and the products to do that.
Okay. And where do you see Wells Fargo fitting in terms of the business community in New Jersey? You mentioned that the economy looks pretty good. It's as you say, companies leave, companies stay. You're lending. Where do you see you fitting in as a player in the state's economy?
So Wells Fargo, through, Wells for the last 15 years, and, obviously predecessor banks, has really a leading market share in New Jersey, both with smaller, companies on up to, middle market and mid corporate, and obviously the much larger companies. So I think our market share is very strong. We've hired 5 or 6 new RMs in
Okay.
the last 12 months. So,
Mm.
we're growing the business. They're coming in and, looking to do new business. So I'm very optimistic about where the business is going and the support we're getting, internally from our credit folks and independent risk and the ability to grow our business.
Okay, well, that was actually the last thing I was going to ask you, was what your general outlook was for the bank itself. You're optimistic. It sounds like you're here to stay. You're ready to go. You're looking forward to the rest of the year. Or I don't want to put words in your mouth. Is there anything
No,
you're worried about?
absolutely.
We talked about the things that businesses should be worried about. Is there anything you're worried about?
Yeah, no, I would say, look, run the business. Let's see where things go over the next couple of years. The team is stable. That's the other thing I want to mention to you. We've got a stable team. I've been here 10 years, like I mentioned
Mhm.
earlier. Our team is stable. You're always going to have some turnover, but for the most part, the folks here have been here for a while. We've added the 5 or 6 people I mentioned. So
Right.
yeah, we're bullish on the New Jersey economy, and I'm really bullish on Wells Fargo.
Okay. Well, that's a great place to leave it. Pete Dontas, Managing Director, New Jersey Market Executive at Wells Fargo. Thanks for joining me. I really appreciate you taking the time.
All right, Jeff. Thanks. Good seeing you again.
Thanks, and I hope you'll come back again. We'll talk more about about where things are going and where they've been. Thanks a lot.
Sounds good. Take care.
And thank you all for watching. Until next time, stay safe, everyone.